Hey, welcome tonight to Grant Cardone's home. I'm Grant Cardone, and thank you for joining me. Thank you for all of you that came live tonight to this webinar. Almost 2,000 people signed up for this in the last 24 hours. So appreciate your interest in what we're doing at Cardone Capital. This is our Cardone Capital hat, by the way. Anybody that does, when you finish your investment tonight, at least your paperwork online, we'll make sure you get a hat. Who knows, maybe we'll do some other special stuff for you as well. So for all of you out there that have been and are registered at Cardone Capital and have already invested with me at Cardone Capital, I want to share with you tonight one of our newer investments, a deal that we've recently closed. I'm going to tell you about the deal, how the deal works, how you get paid on the deal, how you can participate in the deal, how you make money in the deal, and I'm going to share with you the risk of the deal. So first, let me just tell you a disclaimer for Cardone Capital. Our legal disclaimer is on the website. You registered and saw that there, but I also want to tell you, as an investor, you probably know this already, all investments involve risk. You can lose money. This is an illiquid investment that I'll be sharing with you tonight, meaning when you put your money in, your money's in it. It's not like we can wake up tomorrow morning and go get the money. The cash flow projections, the internal rate of returns, the predicted formulas that we use to anticipate the return to you and to me I can't predict the future. I can't promise that it's going to happen. I can tell you I will work my hardest to make sure that we hit each of these returns, both the cash on cash, the internal rate of return. I'll explain all that. You can post your questions below. I'll do my best to answer your questions tonight. I want to tell you a couple of other things, and then I'm going to get right into this deal, okay? Number one, who am I? If you don't know who I am, maybe you're coming here for the first time. My name's Grant Cardone. I now own and control $1.2 billion worth of real estate. I have bought and or sold, transacted on over $1.5 billion worth of real estate. I've done this for 25 years extremely successfully. Up until 20 months ago, I did not raise money from the public. So this is really important for you to know, because I see people talking online about, Grant Cardone's using other people's money to buy real estate. Truth is, I am allowing other people now to get involved in the investment vehicle that I've created. Rather than using big lenders, when a real estate investor buys a piece of real estate, like the real estate that we're talking about tonight, I'm going to show you a deal tonight that we bought, $92.5 million. There's two ways the real estate investor does that. They go to a bank and they get a loan, and they go to the market and get the equity, okay? In the past, the loan is no problem. You gotta have good credit here. You gotta have experience managing property. I happen to have good credit and I have experience. You'll also need equity, okay? So we're gonna buy a piece of real estate. I'm gonna tell you why I'm buying this piece of real estate, and I'm gonna tell you why you should be investing in this type of real estate here in a second. Two things have to happen. One, you're going to go to a bank. You're not going to pay cash for this piece of property. Nobody's going to do that. $92.5 million. I don't know. Could you see the one behind me? Let me show you this. We talked about Nexus last week. We talked about Laguna the week before that. And tonight I'm going to be talking about this one right here. Okay, go to cardonecapital.com. If you want to learn more or you want to schedule a call, you can hit that little orange button and you can schedule a call for Wednesday, Thursday, and Friday. Most of these slots are already taken. But if you want to spend 5 or 10 minutes with my staff, they can answer any questions that I don't answer tonight, okay? Real estate, $92.5 million. I'm going to go to the bank for a loan. We did on this one, $60 million loan. And I wrote a check for $34 million. $34 million covered more than the price of the property for us to manage it, take care of it, prepare it, improve it. I wrote a check for $34 million. I want everybody to understand this very clearly. You guys out there doing assessments about Cardone Capital, you're doing breakdowns on your YouTube channel because you're clickbaiting me to try to get traffic for your YouTube channel. That's fine. I appreciate the rush and the push and the acknowledgement and the hate and the love, the like, whatever you want to do, it's fine with me. But just make sure that you give the public the right data. Grant Cardone wrote that check for $34 million. I didn't take the investor's money on this particular transaction until we funded bought the deal, and it was cash flowing. Okay, investors that came in this, if you came in after I closed this, and that's the only time you could come in after I closed it with my money, when you came in, investors were paid 30 days after they invested in this deal. When you invest in this deal tonight, you will actually start participating in cash flow 30 to 40 days from now, depending on when your registration and money gets in. I'll show you that other people are doing this right now, okay? Now, traditionally what happens is most people aren't sitting around with $34 million to buy a piece of real estate. So that's what I did. I wrote the check here. This is me, okay? What most people do is they go to Goldman Sachs and say, Goldman or Blackstone, and this is how these guys make their money. This is how they get rich. They find operators like me. Let's say it's Blackstone or Goldman or EQR. There's like list of companies out there that are in this space that are like, look, you put $3 million down, we'll do the other 31 million. And what happens is if this is Goldman Sachs would then control or manage me. They would be my superior on this deal. I owe the bank and I owe Goldman. What I decided to do was, because I'm a bit of a, pirate and a pioneer, what I did was, because I don't want Goldman telling me what to do, and because I have a huge or large social media platform that's getting bigger every day, is I decided, hey, let me replace Goldman. I'm gonna take this $92.5 million deal, put $34 million down, finance $60 million, and you're like, well, that doesn't add up. Yes, it does, with the necessary money to keep so that we can manage this property, take care of the tenants. We wanna take care of our tenants. This is a business, okay? And the tenants are our customers. So you wanna take care of the tenants, so you reduce the turnover, you get the rents up, and you have cash flow, okay? I financed this on my credit, the $60 million. I wrote a check for this. And rather than going to Goldman or Blackstone or EQR or all these other companies, I said, hey, let me go to Facebook, Instagram, YouTube, LinkedIn, Twitter, my friends out there that know me and trust me, and said, hey, let me see if my friends want to finance some of this, okay? Meaning, not finance it, but partner with me, okay? I already have the financing, so I'm like, let me see if my friends, my brother, my sister, my uncle, my aunt, and my friends on social media that have been following me for 25 years want to invest with me. All right, now, Johnny, what I'm gonna do is I'm gonna take them to Cardone Capital, okay? CardoneCapital.com is the website. I'm gonna put it back here, and I just wanna show you this week, this is on July the 1st. Let me just do this again so everybody can see this is real time. It should change here in a second. Okay, I don't want to show names here, so, okay, there I am, okay. This is on July the 1st. This family right here, from their trust, their revocable trust that they are, what's the word? Self-directed trust, meaning IRA, KEO, or 401k. They're self-directed KEO. You can invest. By the way, you're self-directed. If you're self-directed, I have a self-directed KEO because I work for myself. So I have a self-directed retirement account that I can invest in this. That's what this family did. They put $100,000 in. Here's another family right here, an LLC. They used an LLC to invest in this. It's not necessary to get an LLC, by the way. You don't need to do that. I have an LLC holding this property, so you're protected against lawsuits. Another great benefit of investing with somebody that knows what they're doing. $165,000. Johnny, I don't know, can you keep going down this line? $500,000. Uh-oh, I'm hung up, Johnny. Okay, here they are. $189,000, $250,000, $50,000, $1 million, $55,000, $175,000, $100,000, $300,000, $1.2 million. All this is July 1st, 2019. This was done at 5/21/28. $28,000, this is a previous investor, $100,000, $130,000, $200,000, $200,000. So just so you know, I've raised $200 million. $200 million in 20 months without using Goldman Sachs and Blackstone. This is unheard of. And I'm really, really proud of my team that is able to do this, put these deals together, and I'm really, really proud of the people that follow me on social media that trust me enough and have been following my career to say, you know what, I don't have time to do these deals. I can't find the deals that you're buying. And I'm going to invest with Grant because I'm going to partner with Grant because Grant knows what he's doing. He's got a history. Okay, I'm going to show you a couple deals here. This deal we just closed last, week, Johnny? Last week. 501 units. This deal right here, Laguna, Naples, Florida. I talked about this last week, 456 units. Here's the deal. We're going to be talking about this deal next week in Sugar Land, Texas. Sugar Land, Texas has the best tasting water in the United States, yesterday rated. All these deals, when you go to CardoneCapital.com, you can see all these deals. You can see my track record. Some of these deals have done 25, 30, 35% per year. Now, I can't promise you that I can continue to do those numbers. I can't promise you that you're going to make money here. I can promise you this. This actually happened. I went and bought this deal for $92 million. Put 34, I think this is right, 34 million of my own money down, somewhere between 32 and 34 million, financed 10-year loan under my name, $60 million. Somebody said last week, Cardone's getting over leveraged. This is a 40% loan to value, a 60% loan to value. I put 40% down when I purchased this. When you buy a house, you put 3% down. I put 13 times more than the average person puts down on a house. Okay, we don't lose this property. I lose this piece of property, everything in America's lost. All right. So let's talk about why apartments, why multifamily. Yesterday, CNBC said millennials are throwing houses away to rent, not because of the finances, but because of the choice. They would rather the mobility. I've been saying this for a long time. Millennials, 75 million strong, are choosing renting over owning. Number two, baby boomers, people over 50 years old, are choosing to start renting because they want mobility. I had some people in my office today, they're like, I just got my in-laws an apartment, got them out of their house, got their money out of the house, put the money in the bank, and now they live in an apartment where they can travel and not take care of a home, okay? All right, why this deal, okay? Let me just show you this deal. And all this data that I'm giving you right now, the executive summary on this property called 10X Living in Del Rey. We bought this deal 6 months ago. That means I have 6 months trailing cash flow on this property already. When you invest with me tonight at Cardone Capital, accredited or non-accredited investor, when you invest in this particular deal, why this asset, you would invest in this asset because of the size, because of the location, because of the cash flow, and because of the opportunity. All right? I have 346 units that rent for about $1,750 a month. Okay, now if you've ever watched any of my other shows, this property is located on 31 acres of land. I paid $92 million. If I go through my executive summary here, again, this is on our website. It was built in 2017. The loan to value is 65%. I don't think that's right. I think it's lower than 65. Let me just check that. And look, let me just check this out. I'm not beyond making mistakes, so don't hold me to what I say tonight. Go do your own due diligence, all right? Divided by 94 million. Yeah, it's 65%, yeah. So it wasn't 60%, it's 65%. The effective gross income is somewhere between 7.2 million over 10 years and $10 million. We think the whole period on this deal is 7 to 10 years, okay? So what do I like about this deal? Why this deal? The reason I like this deal is I believe this deal, obviously I believe in the deal. I paid, I put a lot of money down. I put $30+ million down on the deal. I believe the $34 million that I put down on this deal, and I think Ryan's texting me right now saying we put 32.5 down. And let me just see what he's saying. 61, yeah. So I think this is going to pay between 5 and 6% per year. Okay, again, you'll see it at cardonecapital.com. We'll go through all the numbers with you if you need that. Okay, so if it does 5% a year, it's going to pay $1.7 million per year. Let's say there's two investors, me and you. Let's say we invest in a deal. You put 100 grand in, and I put the rest of the money in. You and I are going to split that percentage of the cash flow on the deal. Okay, that's important because the cash flow on the deal is what we're being paid. We're being paid that little thing. It's like an appetizer. You're being paid, you're eating the appetizer until the main meal gets here, okay? The main meal, this $34 million, my goal is to match the $34 million when we go to sell the property. I paid $92.5 million for the deal. I put $34 million down, thereabouts, okay? I financed $60 million. My goal is to give everybody their money back, your 100 back, or your 500, or your million, and my 33 million. I give all that money back, and then what we do is, my goal is to sell this property for 34 million more than I paid for it. That means I would need to hit a strike price of about $126 million when I go to sell it. Paid 92 million, I think that's right, 92, that's $126 million. Can I achieve that? Okay, well, the way to figure that out is to know what the NOI is. If the NOI, we project this out, you'll see the 10-year projection, the hold period, and then again, we can answer all your questions if you just call us up. I think we hit $10 million of gross income in the next 3 to 5 years, okay? If that case holds true and I can get an NOI is what drives the value, the future value of the property. If I can hit a $6 million NOI, you see, Johnny, there it is. Let's see here. And if you're lost right now, okay, here's the deal. If you're lost, you're never gonna buy real estate. Yeah, that's $126 million. What did I say I needed to be at? What did I say I needed to be at? 34 at 92. Oh, I'm sorry, $126 million, yeah. Okay, so some of that would be expenses. I'm gonna take some of that for managing the property. We have a 1% management fee. Most funds have a 2% management fee. We take 35% of the upside above 6%. That means the investor. You and I are both investors in the deal. So if you put $1 million in, I put 33 million in, I want 6% on my money. As an accredited investor, you get 6%. As a non-accredited investor, because we have a fund for non-accredited investors, if you're not a rich person, if you don't have $1 million net worth, you don't make 200 grand a year, you're called a non-accredited investor. I actually created a fund for you so you could participate in this deal so that I didn't leave out my cousins. I got cousins that are not accredited. I got Johnny, the camera guy. Johnny does not make enough money to be accredited yet. So the US government, the SEC says, look, if he's not accredited, he needs to be called a non-accredited. So I created a fund for him at my expense, not at your expense. And I said, Johnny, you can come in my fund and I'm gonna pay you. I don't give you a preferred return, Johnny, but I distribute to the accredited A investors. Okay, whether you're accredited or non-accredited, I distribute the same way. So if Lewis put in 100, okay, and Johnny put in 100, and Johnny's non-accredited, and Lewis is accredited, both these guys get distributed the same money because accredited and non-accredited get to participate in that deal right there, okay? Keep in mind, that deal is $92.5 million. We put 30 some odd million dollars down. I financed $60 million. I wrote a check for the 30, and I tell you on social media, like I'm doing tonight, you can invest in my deal, okay? This deal is a gorgeous piece of property. A-plus property, Delray, Florida. If you don't know where Delray is, Delray, you just tell anybody, hey, you know where Delray is? Oh my God, Delray's unbelievable. Great place in Miami, near Fort Lauderdale. We think the whole time on this property is 7 to 10 years, And I actually believe that we will exceed what I'm projecting on this deal, because I think rents, if rents only grow 3% a year, in 10 years, the rents on this property will be $22.75. Johnny, what do you think? You think the rents will be higher than that?
For sure, that's what I pay right now on the beach.
Johnny's like, I'm at $22.75 right now. Okay, so at $22.75, I make an extra five. This calculation right here is at $17.50. If I make another $500 on 346 units,
That place nicer than where I live.
let me do that again. Okay, so what did I say? $500? $500? Is that right? Yeah, $500 times 346. This place is, that's a $4 million swimming pool. Times 12, times 92%. It's $1.9 million. If I divide that by 475 cap, that's $40 million. Can you zoom in on this? $40 million increased value because I can raise the rents. Now, I'm just going to bring you to one little other possibility here of how much money could be made on this deal. And I have been wrong in real estate for 25 years. I've been wrong because I miscalculated just how big this would get. This $17.50 today, which is considered affordable, might not be affordable in Cleveland or Kansas, or affordable would be about $13.80. I think the average rent in the United States of America today is $13.80. That includes every little county, state, San Francisco, New York, LA, Florida, and all the stuff in between. Houston, Texas, and San Antonio, and Albuquerque, right? The average rent in America is $13.81. Now, you can't rent anything in Miami, Florida for $13.81. Just doesn't happen. $17.50 is the average rent. This is a brand new property. This property will mature, and when it matures, the rents will go up. But let me just take you out to the year 2029. If the world hadn't come to an end, if global warming hasn't heated up the entire planet, okay, if we are still here, I could see these rents at $3,000 a month. I'm just doing a little math formula again, okay? All this is ad lib, folks. Can't promise any of this. None of this might happen, okay? Could be bigger than this, $3,000. Just think about it. If you would, I had a guy tell me today, he's like, oh, my parents did really good in their house. I said, your parents should have never bought that house. He's like, yeah, they should have. I said, no, your parents should have rented where they lived and bought every apartment building around their house. And your parents could go anywhere they wanted for the rest of their lives because the passive income will go forever. And that's the beauty of multifamily. My goal is not to sell this property. My goal is to never sell this piece of property. My goal is to give everybody their damn money back. See, everybody's like, when am I going to get my money back? What am I going to make? Dude, the goal is to give you your down payment back, your equity, your investment back. To get my $30 million back, we refinance the property and keep it. Watch what happens, okay? $3,000 a month times totally just complete arbitrary times 346. This property will take in $1 million a month in income, okay? Times 12, times 0.92, very conservative. I'm above 92% right now. The property is over 92% right now. That's 11 million. Let me do that again. 3,000 times 346. Questions, Johnny? If you can see the questions, I'm happy to take some. Times 12. That's $12,456, and I'm going to take that times 58. $7.2 million of NOI. The NOI is what determines the value of the property. If I divide that by 0.05, that property's worth, can you see it, Johnny?
Yes, sir.
$144 million. So I know what my marching orders are. My marching orders are to get the NOI of the property, the NOI, the property's value is controlled by the NOI. This is not like this house. This condo is only worth what the other condos in the building are worth. Because this condo that I'm in does not produce revenue. Okay, this piece of real estate behind me is only as valuable as the income that it produces. And this is why multifamily, you should have money invested in multifamily. The money that you have in the bank right now is earning 0.012% and going down. Listen, 0.012. If you have a CD, it might be earning 1%. I'm earning 6%, my appetizer. I'm earning 6% while I wait for the meal. The meal is this: Grant's job and my team's job, 150 people on our team. My job is to get this NOI to $7 million. Okay? If I get this NOI to $7 million, unfortunately, most people that are getting involved in real estate, they don't understand the real game here, okay? The $7 million, if I can get to an NOI of that, divided by 0.075, this is a yield factor. It's a little complicated because if you don't know the game. It's a yield factor that a Fannie Mae uses to underwrite the debt, okay? It's called the debt yield. The 7.5 debt yield. If I divide the NOI by the debt yield, the lender says, I will lend you in 2029 $93 million. I'm sorry, what did I pay for the property? 92. Right? But I only put 30 million down. So we would take the old loan out. Okay? We owe 60 million. We will return the $33 million to the investors. And guess what we would still own, ladies and gentlemen? A property, okay? Now, would the property still cash flow? I would give you your $1 million back. I would get my $33 million back. We would have 99% of our money back, okay? And let's assume the same NOI. The NOI is $7 million still, but I got new debt. And the new debt, I can't tell you what the interest rate's gonna be then, but it's probably gonna be what it is today, okay? Because the world's still gonna be slow.
Joe Jackson was just asking what kind of debt do you guys get, and is it interest only?
This is interest only for 5 years, Joe. This is interest only for 5 years, and then P&I. So I'm assuming that we still owed 60 million. That's a great question, Joe, but we would have 5 years in this example of paying down the debt, okay? And whether I'm paying down the debt or I have interest only doesn't matter. When I pay the debt down, it's reducing the investor's base in the property, right? Watch this. 7 million. I'm going to take $93 million. Let's say I got a $94 million loan times 94 million. And again, I can't predict what the interest rates are going to be next week, much less 10 years from now. But let's just say it is the same as it is today. Maybe a little higher, okay? I'll do 4.5%, okay? The debt on this deal would be $4,230,000. Everybody hold on a second, okay? Because I'm going to show you, this is what people ask. What's my return going to be? What's my cash flow going to be? Watch this. We're going to earn $2,770,000 free cash on cash. I always talk about cash flow. Okay? So if we're equal investors, if there's 10 of us, we're going to share 10 into that number, $2.7 million, free cash flow, every year, forever. How much money do we have in the property now? None. This is the game, man. This is the game. This is called the infinity return. Okay? This is the infinite return. This is no money in. This is how people have gotten wealthy for years. And this is why I like this real estate investment. This is why I keep saying multifamily real estate, apartment buildings like I'm buying behind me are it's not the only investment you can make on this planet, but it's the only sophisticated investment, okay, that protects everyday people from downside, real assets, cash flow, and the possibility and potential for massive upside where you could actually have wealth for you and your family that will outlive you. Okay, last thing I want to answer that a number of people have been asking. Again, we'll look at your questions here. You can always schedule a call. If you go to cardonecapital.com, and I'm going to answer some more questions right here. But if you go to cardonecapital.com, we set this little thing up right here. You see where it says invest or schedule a call? You can schedule a call by clicking that button. Let's see if I can do that. Okay, and let's see what comes up here. And up comes the scheduler. Okay, you can schedule Wednesday, Thursday, Friday. For instance, Wednesday, hey buddy, we got some calls open, and then it'll show red on some of these where nobody's available. Let's see if let's see what this looks like, 10 o'clock. Yeah. You just go in here and click confirm. These are like 5 and 10 minute phone calls you can ask. Tell me about the cash on cash. Tell me about the investment. Tell me about the downside. Tell me about what's the difference between accredited and non-accredited. There's also a whole list of frequently asked questions on the website, cardonecapital.com, cardonecapital.com. Okay, last thing. We have raised $201 million in 20 months. Every week I do one of these, man, people just start putting more money in, both accredited and non-accredited. Our average non-accredited investor is putting in at this point about $25,000. Okay? Non-accredited, it's self-verification. You say, hey, this is how much money I make, this is how much money I want to give you. Our average is about $25,000. Our accredited investor is putting closer to $280,000, with some people putting $1 million, $2 million. I mean, some people that you would know, people that you see playing football on the weekends. Basketball players, like, you know, you're going to see and hear more about that. This is a great opportunity for you to finally get started investing, not in little deals, but in great pieces of real estate that the banks believe in. Why would a bank lend me money? This much money, okay? So anything I can do to help you get started getting cash flow. If you're already invested, go to cardonecapital.com. You're already invested, you want to put more money in. Next week, I'm going to show you a fourth deal that we brought in. I'm going to show you how we're going to take all these deals, put them together, and provide you with the diversification of having multiple properties in one fund. But some of these questions that you might have that are personal to you, all you got to do is go there, schedule a call, hit 10 o'clock, 10:15, 10:30, 10:45. You can just confirm. It'll ask you for your information. It's going to ask you how liquid you are. Have you ever made an investment before? It's going to ask you if you have a good attitude. Because look, if you don't have a good attitude, I don't want you in the deal. All right? There's 7 billion people on planet Earth. If you live in Canada, Europe, Croatia, Russia, as long as you're not a terrorist, you can invest with us, okay? Go to cardonecapital.com and schedule a call, invest with us. I'd love to have you on board. Couple things, anybody that does at least, you do the paperwork and do at least 10 grand, we'll get you a hat tonight. Anybody that does $1 million tonight, I'm gonna get you a diamond ticket to the 10X Growth Conference. Okay, and those are what, 15 grand, 20 grand? All right, anybody that finishes tonight, paperwork, get your funding in. You can't get all your money in, but you could get it in by noon tomorrow. Then I'll get you a diamond ticket. That's a $15,000 ticket. I only have like 40 of those left, so they're priceless. All right, what else, Johnny? What else? Any questions we can answer?
Questions here. We got.
Are you on Facebook, Johnny, as well?
I'm on Facebook.
Okay. Hey, thank you. Please share the stream. Share it with your friends so they can see it. And we invite our Cardone Capital investors in to see this, and then we'll share it later on. So. Go ahead, Johnny.
So Stephen has a question. Does the split apply to cash flow if the preferred return overperforms?
Okay, so his question is, this is a great question. His question is, if we do 10% cash on cash, he wants to know, does Grant, your partner that's doing all the work, they got it to 10. It's around 5 right now. So just so you know, this property's cash flow at 5%. He wants to know if I can get it to overperform above 6, which is what I promise is a preferred return. Promise is probably the wrong word there. Got to be so careful right here. Okay? So the preferred return just means, man, I'm going to give you 6%. As long as the cash flow is there for me to give it. I mean, the property has to produce that, okay? That's our target. His question is, Grant, if you get to 10, what happens to that? We take 6, pay it out to the investors. Who's the number one investor? Me. I get my 6. You get your 6. And then we got 4 to split up, all right? So you get 65% of the 4. You get 2.6, and I get 1.4. I get whatever's left over as a bonus because I got to 10. So what did you get? You got 8.6, and I got 1.4. Does that seem like it's fair to you? Right? I increased your return by 40%. And I kept some of it. All right. So that's how I win the game. Two ways that I win the game here. One is if the property if I can get it to outperform, if I can get it to do some of this magical stuff that we do by taking care of customers, by literally just picking up the phone, by leasing people, by taking care of their problems, by making the property secure, by taking care of the tenants and the toilets and the roofs and the paint and making it a secure property and treating people right and giving them a 10x experiences. By doing that, if I can reduce my expenses, reduce my turnover, and increase the cash flow, then I benefit. Also, when I raise the cash flow, I raise the value of the property. And what you want to do, the way to increase the value of a piece of real estate like this is to increase the cash flow of the property, because the next people we go to sell to want cash flow. Okay, now the other question I ask is this, like that piece of property right there, who can I sell that to in 5 years? This isn't a chiropractor that makes 400 grand a year buying this. This is going to be a $120 million piece of property. It's not going to be a rich doctor, okay? It could be, probably wouldn't even be 10 rich doctors together. This is going to be a very wealthy life insurance company, a very wealthy Blackstone type company, somebody with tremendous amounts of money that has to place. They're probably not going to buy one of these from me either. That's the other play here. See, when I scale, when I put together, I've done 4 deals in the last 30 days. This is over $300 million, a third of $1 billion worth of real estate I have bought in the last 60 to 90 days. So I did 280 million last week. So, I mean, these are unbelievable numbers. I cannot believe I'm doing this today. It's something I've always wanted to do. I always dreamed I could be a real estate investor. And by opening this up to my friends on Facebook and like Joe that asked the question, and Leon this investor with us, and Lewis that has been on my stages and invested hundreds of thousands of dollars with us. So some of my friends that you've seen on stage, you know, like those guys that you see me hanging with, they're investing money with me. So I don't want to use their names here because I didn't. Anyway.
So one more question.
Yeah.
With the refi thing, somebody's asking, so after you get your investment money back, are you still getting paid for the property?
So good. Now the question on the refi thing. Remember the refi thing where everybody got their money back? Now, I know this is like, Ryan's going to tell me later, dude, why'd you go into all that stuff? It's so like unbelievable to people that I could buy a piece of property for $92 million and refinance it for more than I paid for it. I've only done it like 11 times. Okay, this is the magic of multiplying wealth. Okay, and you can only do this with real assets that produce real cash flow. This is where you get into infinite returns. This is how the wealthy get wealthy. The REITs, just so you know, if you've ever invested in a REIT, a real estate investment trust, when they do this trick right here, they pay you back and say bye-bye. You're no longer invested in the deal. They're like, here's your money, here's your original investment, it's over. And they keep the property. Okay, I've agreed not to do that. Okay, so what I'm going to do, I'm entitled to do that. I could do that, but what I've agreed to do is say, hey, you were in it for the 7 years, 6 years, 7 years, 8 years, whatever. Stick and stay, babe. You with me? You with me today? You with me then? Okay, this is where it gets great. This is why this is the little guy, the everyday guy, my mom, my aunt. This is why they could never get ahead, man, because they never got the best part of the deal. The best part of the deal is right here. The best part of the deal is we get all our money back and some. I did this with Ryan Secco. I've done this with Jared Glant. I've done it with my sister. I've done it for my mother-in-law. I've done it for other investor friends of mine that were in a deal with me, okay, and said, hey, here's all your money back. We still own the deal. They're going to get checks for as long as I own that piece of property, until somebody decides to sell that piece of property. Last thing I want to share with you is this asset class that I'm talking to you about. If you want to take care of your family, if you died tomorrow and you cannot take care of your family anymore, This real estate will take care of you forever. So if you're the beneficiary, when Johnny comes in, Johnny's like, hey, I want to put this money, my mom's going to be the beneficiary. Johnny's got a bunch of money sitting in the wall right now. He dies today, fireman goes in there, finds Johnny had a heart attack. Fireman he sees the door, so somebody steals the money, or worse, nobody gets the money, it just stays in the wall for the next 30 years. His mom doesn't even know about it. Okay? When Johnny invests with me, Johnny dies, guess what? This gets transferred to his mother's trust, and then we'll pay his mother for years. Because I'm not going to pay Johnny to shoot video for me if he dies tomorrow. He won't be around to shoot any video. But Johnny's investment will still pay his mother, right? So just think about the cash flow that you can provide your family with that doesn't come from earned income, but comes from passive income. Now, I didn't cover all this, but you could ask our staff about the scheduler. Call up, man. Just schedule a 5-10 minute call. Get your questions answered. If you're not sure, find out. If you call and you're still not sure, don't do the deal. Right? Somebody's going to do this deal. Somebody's going to take advantage of this. And if not, I'm going to own the property, and I'm going to be bragging to you 7 or 8 years from now. I told you guys. Right? So I've been telling people for 10 years, man, invest in real estate. I didn't have a vehicle to put you in. Now I do. CardoneCapital.com, CardoneCapital.com, CardoneCapital.com. You get the cash flow. You get the depreciation. You get the write-offs. You get all the same things I get. The only thing you don't get is the day-to-day operations, the day-to-day headaches, hiring people, firing people, getting rid of tenants. You don't get any of the headaches. You just get to invest with me, but you get everything else, all right? Okay, passive income, it'll take care of you forever. CardoneCapital.com is the website. You can invest tonight. When you do, you get a hat, $10,000 minimum. If you go to $1 million, I'll give you a hat and a diamond ticket. If you're not ready yet, no problem, schedule a call. I'll be here for you when you are ready. Good luck investing. Thanks for watching tonight.